There we go. Okay. So, as I was just stating, this is going to be another session on analyzing price action and volume. And we're doing this to look for optimal day trade setups. Now, again, you don't have to use this just on a day trade level. You can use this on swing trading. The reason that I like to do this on the day trade level and present it is just because there's more opportunities, right? You're going to definitely see more of these setups than you would, if I'm just trying to look at on a swing level, right? Because 5 minute chart is a daily chart on the 5 minutes happening a lot quicker than a daily chart. Um, so let's do this. I want to show you what a trade I took on Amazon today. Um, didn't work out. It wasn't a killer trade, but it was a good trade, right? And as I always talk about, like a good trade doesn't have to be a winning trade. Actually, a losing trade can be a good trade as long as you follow your plan. And a trade that doesn't hit target but still makes you money can be a good trade as long as you followed your plan. So we're going to take a look at Amazon today. I was looking earlier today and I was trying to find, I'm pretty selective. I'm one of those people who I don't do a lot of volume in terms of like certainly I'm not like DJ Dan who has 15 trades in the first 10 minutes of the market, right? And that's okay because we're just built differently, right? He's a different trader than I am, and I need a little bit more data, I need a little bit more information. So which is fine. That's what makes all of us unique and why we all need to have our own individual trading plans and trade those plans. So what I'm looking here on Amazon was I had looked at Amazon and look, this move off the open was just incredible. And then when I threw it on, when I was looking at it on the 15, I'm watching this thing go up, right? And people often ask me because I do really incorporate the fib retracements into my trading constantly. And people are always asking me, but how do you know, when to throw the fibs on? Well, I had the fibs on after this 15-minute candle right here formed, the first 15-minute, right? And all I'm doing, and I'm just going to demonstrate this just because people ask me like, well, but by the time I get the fibs in place and set up and all that, no, you can simply like on the 15-minute chart, I had the fibs on here right away, and I'm looking for some type of retracement, right? And and if I was looking to play the first, now granted, I didn't see Amazon in this first 15 minutes. I actually noticed Amazon after it made all these, these three big bullish candles in a row. That's when I recognized Amazon and it caught my eye. I'm like, all right, I'm going to keep an eye on this. But even if I hadn't, let's just say in the first 15 minutes, right? Had I thrown on the fibs, I mean, look at that perfect retracement right here, right to that 50% retracement, right? You could have easily just thrown in a limit after this first 15 minutes. Now, granted, I'm this is hindsight trading, of course, but my normally when I'm doing that kind of a trade on the first 15 minutes, I do like to see a much stronger close than how this one closed. I like to see the close of the candle definitely, at a minimum up around this level here, right? So this was not the perfect close for me. So I probably wouldn't have taken this trade as it's set up, but you could have, right? You could have easily, after this first 15 minutes, thrown on the fibs and boom, perfect retracement to the 50%. And then off it goes. And you put your entry in at the 50, stop goes down here below the 78.6, and boom, off it goes. Would have been a great trade. Okay. I didn't see that. So what I did see was after it made this move, right? So at that point, what I did was I threw on the fibs here, right? After I saw these these three 15-minute candles here, I threw the fibs on here and I waited for the pullback. Well, it just kept going higher. So then after the next 15 minutes, I took him and I moved him here. And people are, and that's what I always try to explain to people. Like I'm actively moving my fibs as price is developing, right? I'm not just waiting for things to happen. No, I keep moving them. So eventually I moved my fibs up right into here. Okay. So I had that laid out. And after you have to understand also, look at this 1, 2, 3, 4, 5, 6 bullish candles in a row, right? Really nice move, strong bullish. There's no question that the move here is bullish, right? And then you get this indecision, high wave candle doji at the top. But the one thing that you'll notice that that does not meet my criteria here when I talk about what I'm looking for is, those of you who have listened to me before, and Ape Gator, if you're hearing me for the first time, what I'm looking for is specifically, I'm looking for double tops, double bottoms, hammer candle at the bottom of a move, shooting star at the top of a move, all in conjunction with volume spikes. The volume spikes are key. That is a key component to what I'm looking for. And if you notice here, and again, we're looking at a 15-minute chart here, but right here, you did not get a volume spike, right? Volume was decreasing after this candle here, volume was decreasing, right? So I did not get a volume spike, right? And so that doesn't meet my criteria in terms of what I'm looking for. But what did meet my criteria, and I'm going to switch to another screen. Hopefully this is switching in between. Just make sure you're seeing now the 5-minute here and the daily chart. Somebody confirm, because last week when I was switching back and forth like that, it was not showing up that way. Okay. Thanks, Nelson. Okay, cool. All right. Yeah. Last week it was weird. Every time I did that switch this way, I wasn't appearing properly. So, okay. So here's the 5-minute chart, right? So right here, 5-minute chart. This is that 15-minute move that we just looked at, right? And if you look, what I'm looking for again is volume spikes at the top of a move. Well, you did get one here, right? So here was a nice move, right? This candle. And that is, if we zoom in a little bit, let me just kind of isolate that price action here for a second, right? That would qualify, right? That caught my eye. I'm looking at it. So at this point, right, I'm thinking, okay, maybe I can go short on this. Maybe go long, but I'm looking for that setup, right? And I did get that volume spike, and it has a nice upper wick, right? Perfect, great. Now I'm still watching it. I'm looking for an opportunity to go short. It doesn't even present that opportunity, right? It just, this candle for whatever reason just had high volume and it continued bullish. If we get to the very top of the move here, right? No volume spikes, right? So at this point, if I did get a volume spike, let's say I got at the top of this move, I got a really nice looking bullish shooting star candle with that kind of a volume spike, absolutely, I would have been looking at going short here, but I didn't get that. So I'm just sitting on my hands. I'm just waiting for for the setup to come to me, right? I'm not chasing anything. I'm not going to force anything. I'm just waiting. And then, so again, if you think about what I was talking about, double tops, double bottoms, right? Hammers, shooting stars, volume spikes. Well, I had to wait until right here for that to happen, right? So price came down, and yeah, were there setups here? Sure, there were setups, right? I could have taken this, but I was looking for, the market was strong, right? So no question that the market was strong today. I was looking to go bullish. That was the direction I'm thinking. Okay, so and if you look over here at Amazon, right? So, looked like a pretty strong day. We had a slight little gap up today, it looks like, or did we open flat? It's pretty close, right? Here was the close from yesterday. Here's the open. Maybe a tiny, no, it looks like, I mean, I could just double check that. The close here was, let's see, 41, 38, 41, and the open 30. So it's pretty close, pretty much flat, right? But I think there's no question that Amazon was in a bullish trend. So what do I want to do? I want to look for an opportunity to get in bullish on Amazon. Again, if I had seen a setup to go short up here that fit my trading plan, I would have taken it, but I didn't. So I wait through this entire pullback. Now, keep in mind, I threw on my fibs, right? My fibs are right here. So right now, here is my, here's what I'm looking to trade. And I went ahead and I set up this entry right here. I was looking at this point here and this point here, and I set up a limit buy right here, right? So it was right about that. Well, no, it was right on the 61.8, right? 130, 138.81. I think I got in at like 138.84 was actually where I got filled, right? And this was just a blind buy, right? I didn't look for this. Sometimes I do wait for the confirmation candle. You know, we've talked about that, but on this particular trade, the way I was taking this was I was taking it as just a fib retracement, limit buy, stop was down here. It was I had a $1 stop, right? So my stop, the entry was 138.80, what did I say, 84, and my stop was down here at 137.84, right? So I was a little loose with my stop. I went $1, right? I could have actually gone right below the 78.6, made it a little bit tighter, but I just went with $1. Just felt like, you know, let's be a little conservative here. You know, a dollar, you know, between my entry and my stop on $140 stock seemed just, you know, reasonable to me. So went ahead, set that up. So entry 138.84. You know, again, I didn't play a whole number. Like I like separate, you know, everyone's looking at 138.80, right? That's the whole number. That's a granny number. Everyone's looking at that whole number. So if I'm going to get into it, I'm going to step in front of that a little bit, make sure that I get filled. Well, so I did get filled on this candle right here, right? So that was the candle that filled me. But before we get into that, let me also show you, you know, what I'm looking at on the 15-minute and the 30-minute. Okay. So 15 and the 30, right? Again, I'm looking at these higher time frames. I'm looking at the multi-time frame analysis. I'm looking for the 15-minute and the 30-minute to support my thesis that I should be looking to go long. Okay. And what did I get? Well, on the 5-minute chart, when I got filled, now I'm going to approach this two ways. I'm going to explain to you how my trade went, but how also, if I didn't do just a blind limit buy, how I could have executed this trade and still gotten in, right? So this particular trade, I just did like I said, just a blind limit buy, had my entry here, got filled on this candle here. And if you notice, let me go back to that well, I won't switch, but you can see there actually is a volume spike here, right? So here's a hammer-ish. It's not a perfect hammer, right? On the 5-minute, it's a hammer-ish candle. It's got a nice lower wick. So here is the buying pressure, right? It came down, it filled me, and there's that buying pressure right there, right? But go over here, look at the 15. What do I get on the 15-minute, right? Beautiful looking hammer. Now, keep in mind, the hammer doesn't have to be a bullish hammer in order for it to be a bullish trade, right? The sentiment of this candle is really what I'm focusing on, right? So when I talk about price action and volume, price action is just this. It's what the candles are doing, right? And the price action here, right? The sentiment of this candle is very bullish, even though it closed bearish, even though it was a bearish candle but there's my volume spike I'm looking for, right? And why do I look for that volume spike? Well, to me, when I look at that, when it happens at the right time, right? So time and location are key. So when it happens at the right time and at the right location, that is an indication to me that it's exhaustion volume. Another term that I've thrown out there, capitulation, right? So bears try to push it down, bulls step in and go, nope, we're not going to let you do it. Bears, you know, take the profits, give up, and there's the buying pressure, right? So you have bulls looking to get in, but you also have bears, right? Bears who would have been in here short, who have to do what to get out of their position? They have to buy to close, right? So that's your buying pressure, both from the bear side and the bull side, right? So if you think about that, that's a very bullish candle right there, even though it technically is a bearish candle. So, and then you got the same thing over here, right? So the 5-minute and the 30-minute, kind of a similar look, hammer-ish, lower wick. So this trade for me worked out perfect in terms of it being a blind buy. And then as soon as I got, you know, so here on the 15-minute chart, right, it was a pretty good fill, right? So here was my entry. I got filled on a spike. So on a wick down, right? So when that happens, I get more aggressive. If I get that kind of an entry, if I get filled on that kind of a candle, I get aggressive with my stop, because my feeling is here, right, based on the sentiment of this candle, that I got filled on a beautiful wick down with a lot of buying pressure. Price shouldn't get back below this level, right? That's the line in the sand, right? That is it, right? Price should not get back down here. Now my stop was down here, way down here, 137, what did I say, 84, right? Down here. So when this candle closed, so I'm watching this both on a 15, or a 5-minute and a 15, and of course the 30 here, but primarily what I was looking for was, because this was the perfect hammer, right, to get filled on. And I remember at one point it was green. I was like, oh, even better. But as soon as I got this candle, right, I waited another 15 minutes. As soon as I got that candle and I got the close above this level, my stop went right here, right? So immediately I was able to basically cut my loss in half, because again, the idea here is that because of this fill, right, this lower wick, and my belief that price should not get back below that, if this truly is going to be a strong move, price should not break below this level here, right? Does everyone agree? I'm curious if anyone has a different sentiment about that, different feeling. Throw it in the chat if you want. I'm going to take a sip of water. Sean agrees. Cool. Oh, and hey, Sean, real quick. Do me a favor, and Nelson agrees. Sean, do me a favor and just throw it on your chat to everybody, please. You're on hosts and panelists, and that way the rest of the crew can see your message. Beautiful. Thank you, sir. Yeah. So I immediately was able to move my stop after this. I waited 15 minutes. I wanted this to close, but then I right away moved my stop right here. So right away, I'm at, the name of this game is, we're all looking we're all looking to make money. That goes without saying. But the key is controlling your loss, right? Minimizing your risk and controlling loss. Let's see. Lucian says, I agree. But I also see a wick coming back down there and trapping before it runs. Yeah, sure. Lucian, there's something to be said for that. And so let me just explain what Lucian is saying. Lucian saying that he could also see a wick coming down here below here to create some type of a bear trap and then go up. Lucian, I would agree if this was not that kind of a hammer, right? If it was, if it looked more like this, where there was a bigger body and less of a wick below, yeah, I could definitely see that. I could, I would go all in with you on that theory. But because of this kind of hammer, right? And again, it's the sentiment of that candle. So I get what you're saying 100%, right? That, and Lucian, I also keep an eye out for these, the traps, right? Whether it's a bull trap or bear trap, and it happens constantly, right? It happens all the time. It's just my approach in terms of taking all this in the context of this candle, right? Not just, and again, with a volume spike. So these are all the boxes I like to check off that I've noticed, right, from experience, that these should be the bottoms, right? That this should be a really good fill. And anyway, so, but I get your point. Your point is well taken. And if it weren't for that type of a hammer candle on that 15, I would agree. Even on the 5-minute, I could agree with you that I could potentially see this coming down. But I use the 15-minute here, right? Not the 5. I'll in a second, I'm going to explain to you how I switch back to the 5-minute then to manage the trade. But it was the 15-minute candle, this one here, that sold me on moving my stop, right? So I was looking, based on my trading plan, if I get that kind of an entry, right, on that kind of a wick, right, and that's the key part of that, is I get filled on that kind of a candle, and then I get a close above that candle, I move my stop, right? So this was executed on the 15-minute chart. But now let's go back to the 5-minute chart, and I will then walk you through how I manage this trade. Okay. Let me just switch back here. All right, just make sure you're now seeing that 5-minute chart and the daily chart here. If anyone wants to give me confirmation that you're looking at that. Yeah. Thanks, Nelson. Appreciate it. Again, sometimes when, last week when I was switching back and forth like that, people are like, I can't see your chart. I don't know what you're pointing at. So anyway, so thanks for confirming that. All right. I'm going to get rid of the fib retracement now because, well, in a second, look at this perfect fill right down at this, 61.8 level, right? So those of you who may not use fibs all the time, the buying zone, it's not like a specific level. It's buying zone is 38.2 to 61.8. My personal preference is I throw on this other one. I've talked about this before, 66.8. I don't know if you can see that. Let me, give me a second. Let me see if I can make that a little bit clearer. So 61.8, and then this level 66. Okay. 66, it's a level I added on my own, right? So that's not a default level in Thinkorswim. So the 66 level is a level that I was introduced to by an institutional trader, and just because everyone is watching, all of us retail traders who are taught how to trade. It's 38.2, 50%, 61.8, right? That's what we all know. Well, the point that this institutional trader was saying is that, they all know that's where we're looking at. So they actually, the 66 level is one that I was introduced to, that sometimes price will actually get down and look, I mean, perfect, right? It held that 66 level perfectly, right? So anyway, I get filled. Let me get rid of this, the fibs here. And let me show you how this trade worked out, right? So the first thing I had to do when I was setting this up, very first step is I said my entry was 138.84, right? So it was where this line is right here. My stop was 137.84. Again, I could have been a little tighter with my stop, but I figured, let me just drop a line in here. It doesn't have to be exact, right? So somewhere like that, right? So I could have gone under that 78.6 level for my stop, and clearly that would have been the better location. I just figured on $140 stock, $1, cushion was playing it safe. But I also need to make sure that I could hit. So per my rules, right? If I'm going to take this kind of a trade, I need to be able to see that there's a clear path to get to either 1.2 or 1.4 before the high of the day in order to take the trade, right? So you have to have the reward versus the risk. First off, you need to make sure and just start looking at this visually. I think my 1.2 was like right here, right by where this pivot is right here. So I'm like, all right, I can at least get to 1.2 by that pivot. I could get to 1.4 before the high. I'm like, all right, so I can take that trade, right? And if it didn't, a couple of options, right? I could pass on the trade. I don't have to take the trade. I could tighten up my stop, right? Again, I knew that I was using a little bit of a loose stop in terms of just using the fibs, right? I could have tightened up the stop. I could have been more up in here, like the 138.24 level, right? And that, would have worked out very nicely. So a couple of different things, but you do want to make sure that you have the reward to risk there, that you do have a clear path to hit a level before you get back to the high of the day. Now, again, that's my rules, right? When I trade, I'm looking to be able to get to a target, if not by this pivot in this case, but certainly by the high of the day. So I took the trade, I got in it. Perfect hammer, already covered that. And now let me walk you through how the rest of the trade went. Okay. So as I mentioned, that 15-minute chart, so 5, 10, 15, once I got the close above this level, which looks like it probably happened on this candle here, that was the one, I moved my stop here. Okay. So once I move my stop, then I go, okay, based on this candle here, now what I'm doing is I'm going to be using a 5-minute 2-bar trailing stop. And so when this candle closed, I said, okay, 2-bar trailing stop. That means that the very next candle, if it makes a higher high and a higher low, I can count back 2 candles, 1, 2, and move my stop there. So this candle here, right, is when I move my stop here. Then I got this candle and it made a higher high and a higher low. So I counted back 2, 1, 2, and now my stop is here. I was almost at that point at break even that quickly, right? So you all know what it's like, right? When you get your trade to break even, right? How good of a feeling is that? That you know you're in a free trade, right? Turns around, goes against you. You're not allowing a trade that was positive turn into a losing trade. It's just, it's a great feeling knowing that you don't have to, even stress about it, right? You don't have to think about it. It's easy at this point, right? So move my stop here. I'm almost at break even. Now I need the next candle. I'm waiting for the rules to this trailing stop is the next candle has to make a higher high and a higher low. Well, this did make a higher high, but it made a lower low. Can't move my stop. I can't do anything. So now I have to wait until I get a higher high and a higher low off this candle right here. And that didn't happen until right here, right? Because even this candle made a higher high, but still a higher low. So I had to wait until this candle formed. And then once that candle formed, I counted back 2 candles, 1, 2. So I could have put my stop below here, but why would I do that when this candle's lower and this one's lower, right? So when that candle closed, I got to go back 2, 1, 2. So I used this third candle here and I moved it below here. So my new stop was here, and now that quickly I'm locking in profit if price turns around and goes against me. And those of you who have been with me when I've walked you through, you've seen how well this system works, right? How well this trailing stop strategy does work. Now in this case, well, we'll get to it, but it wasn't the best trade that I've taken, but again, following my plan, it was a good trade. So after this candle, I'm waiting for a higher high and a higher low. This candle happens, higher high, higher low, count back 2, 1, 2. Now my stop is here, right? And I just continue with that. So after this candle, my stop was here. After this candle here, now this candle, right? And it is a higher high and a higher low. Yep. Count back 2. Now my stop is here. Then this candle, did it make a higher high and a higher low? It did not, right? Inside candle. So now I have to wait for that candle to come in that gives me a higher high and a higher low compared to this one. And that happened here. This candle comes in, I count back 2, and my stop was right at this point right here, right? Because it count back 2, 1, 2. My stop was now here. Price comes down, and I got trailed out right here. Okay. Trailed out, not stopped out, right? Made money, right? It's an unfortunate that happened on that wick, but if you look here, price still would not have, even at this hour at 3:30 in the afternoon, I'd be looking at this point to exit the trade because it's not even getting up to my 1.2, right? So is it a great trade? No, it's not a great trade, but it's a good trade because I follow my plan, right? I let the charts, tell me, they showed me what I was looking for, right? And I followed my plan, locked in a profit, was not a home run trade, but that's okay. Cause sometimes, Jeremy often says everything works in the market, just not all the time. But you've seen the examples when I use that 5-minute trailing bar stop, and it 8 times out of 10 it works great, right? Just so happens that this was, I knew taking this trade, right, I'm also watching the market, what the market was doing at that point. Market was kind of pulling back. When I say market, the broader market, right? So S&P, the NASDAQ kind of pulling back, went sideways. So I wasn't expecting this to really be that great of a home run trade after this move, but I'm like, okay, but it was my setup. So I took it. Got trailed out here. I would have gotten, even if I hadn't gotten trailed out here, I certainly would have gotten trailed out in this candle, right? So because not a single candle after this one made a higher high and a higher low up until this here, right? So anyway, questions on that? Questions, comments, thoughts? I'm gonna take a sip of water. Let me know if you have any thoughts on it. Don't see anything in the chat. So hopefully this is all making sense. Let me clear these lines out. All right, let's take a look. I'm just going to randomly look through and see if let me see what else. AMD today. Let's see. And when I do this, when I am going and looking for things, my first step is, and this is back trading, right? So at this point, I just showed you, that my actual trade from today, but now we're just going to kind of back trade this process, excuse me. And first step is I'm before I even look at the candles, I'm just looking down here at volumes, see where the volume spikes are, right? And there are some, right? So like, for instance, we zoom in here, right? So if I was looking to trade AMD, right, and I see, volume is kind of dropping off, and then, what I'm looking for is a series of volume levels like this, followed by a spike, right? So I'm, yeah, there's some spikes here, but volume was high to begin with, right? Volume was pretty high and it was dropping off. It's right here when volume kind of levels off, right? And it's just kind of just hanging out, and then all of a sudden, boom, you get a volume spike. Okay, well, let me look at that. Okay, so volume spike would have come in here. That was 11:10 in the morning, right? Okay, so think about it. None of the rest of this price action had happened. I get a volume spike. It's at the top of a move. Okay, so that's good. That's something I'm looking for. Is it a shooting star? Nope. It's not giving me the candle I look for. So again, I'm looking for reasons why I might believe that this could be, putting in the high and it's now going to retrace. So I'm looking for any indication. I go, okay, well, I did get the volume spike. That's what I'm looking for, but I didn't get the kind of hammer. I mean, I'm sorry, shooting star that I'm looking for at the top of the move. It's not a double top, right? It's just making a high, and it's not giving me the kind of candle I'm looking for. So again, that was at 11:10. If we go into here, okay, and this is why the multi-time frame analysis is so key. Okay, so if I'm looking here on the 5-minute chart and I see that volume spike, and I go, okay, well, is this time for AMD to potentially roll over, right? And then I come in here at 11:10 and I see, this price movement here. I go, no, I'm not seeing any indication here on the 15-minute chart at 11:10 in that area, right? So here's 11 o'clock, here's 11:15. If I go into the higher time frames and look at it, I'm not seeing an indication that price is ready to reverse, right? This is the candle I'm looking for, right? That's the kind of candle I'm looking for, but there's no volume spike, right? So that's why I always look for these things in conjunction with each other. I'm looking for the candle, but I'm also looking for that volume spike, right? So at 11:10 here, even though it was looking like I got that volume spike on the 5-minute, if I look on the 15, that doesn't look ready to roll over to me. And if I went into the 30 down here at that time frame, right, still isn't looking like it. Now, you got a kind of a cute little doji here, right, at 11:30, right? But at the time that I was looking to potentially look for the rollover, this was the candle, right? So there's nothing showing me in the higher time frames that price is ready to roll over. So that's why it's so important and why I always go and look at the higher time frames when I see a setup on the lower. So whether it's a 3-minute or 5-minute, I'm always going to go to the 15 and the 30. I'm going to look there to see if they're in agreement, right? If the lower time frame and the higher time frames are in agreement, right? And what that will do is that will keep you out of, hopefully keep you out of taking a trade in the wrong direction. Because it all comes down to, you know, being correct on your analysis, but also timing, right? There's plenty of times that I've given examples in the past, plenty of times when you're right on your thesis, but the timing is off, right? So you might have gotten stopped out of a trade only to see the setup that you were looking for and the movement you were looking for to happen, 15 minutes, 30 minutes later, right? So timing is key. But here's a great example of a hammer shooting star candle that I would look for at the top of a move, but there's no volume, right? I would want to see that kind of a volume spike, something like that, all of a sudden out of the blue, boom, big volume spike. And that would be some type of a potential of exhaustion buying, right? So exhaustion buying at the top of a move, exhaustion selling at the bottom of a move. Let me switch back over to this 5-minute, right? And again, I'm just looking for examples, okay? So here was Friday, right? No, this was, Friday. Here we go. Here's a great example. Okay. AMD on Friday. Price comes down, makes this move, right? Not really seeing anything, but then it comes down here, right? Comes down, comes down, comes down. Okay. What do we have? Double bottom, right? Double bottom here at 11:50 in the morning. So there's my double bottom that I'm looking for with the hammer, which is what I'm looking for, and volume spike, right? You can see that. If I look left, again, this volume was greater than all the previous volume all the way back to this level right here, right? And that's what I'm looking for. Double bottom, hammer, volume spike, and then you can take that bullish, right? Oh, I will go back in a second. I showed you how I had taken today's trade, but I'll show you the other way that you could have taken it. I meant to do that, but let's finish this real quick. So volume spike here, right? And so this was Friday, 11:50. Let's go into the higher time frames and let's look at AMD right there, right? There's that double bottom. So you're getting the 5-minute and the 15-minute in agreement, right? Here's that hammer candle with volume on the 15, double bottom, right? Take that bullish. Go back to come here in the 30-minute confirmation, right? All 3 time frames here are in agreement. They're all showing me the potential. So think about this. AMD on the 5-minute was showing me it was a bearish candle, right? It was a hammer right here, 11:50. It was a bearish candle, but look at what you have on the 15-minute and the 30-minute. Bullish hammers, right? Great looking. That's exactly what I'm looking for, right? Bottom of move, double bottom, hammer with volume. Let's go back to the 5-minute, see how we could have played this. If you'd taken, again, in all fairness, unless I did this as a blind buy, which I would not have done because this broke below, right? This went way through the fib retracement, right? This move here, way through the fib retracement. But So at that point, I'm not taking a blind buy, right? I'm not taking a blind buy at a double bottom. I'm going to look for my confirmation candle. And in all fairness, I would not have been able to get into this trade based on how I would have traded this. So let's just, but it's always good to look at something and recognize, because maybe I need to, in the case, maybe I need to come up with a rule on how to play double bottoms and double tops that, and Lucian, you know, I'm not a breakout trader, right? I don't take breakouts. I don't take breakdowns. You know that. And that's part of your comment there about the potential trap. And that's the reason I don't. And I've made that very clear. And other times I've been on that, that's the reason that I don't take breakouts and breakdowns, because the majority of them fail. Nelson, the cutoff, if I get a close below the, so like if I'm let's say I'm taking a trade just solely off the fibs, right? My entry is going to be anywhere from, let's say, the 50%. The 38.2 is not enough of a dip for me to buy. So my levels I'm looking at are anywhere between the 50% and the 60%. I'm sorry, 66% retracement. Anywhere between 50% and 66 is what I'm looking for my entry. My stop is below the 78.6. Okay. So in the case of when you ask what's the cutoff or the point where you're no longer interested in a blind order, let's say I get, let's say it gets down and it closes below that 66 level. That's my cutoff, right? So because at that point, it could easily roll down below that 78.6. So I kind of use those levels, which are my buying levels and my stop level. So if I get some type of a close below, let's say 61.8 or the 66, then that's where I'm not going to be interested. But it's kind of hard, right? Because that is where I set up my blind order. So I don't know, just like today, I didn't know, it could easily have just kept going, right? So when I do a blind order like that based off the fibs, it's because of the move preceding it, right? So I won't just do a blind buy on a fib on just any kind of price action. It has to be, if I'm going bullish like I did today, I need to see, as I pointed out, how strong that move was, right? The initial move that I was using the fib, the blind buy order on, it was because it was such a strong bullish move. Or if I get a really strong bearish move and then I'm looking to just do a blind limit sell, right? So it's, I won't just do that on any kind of, it's very, the key part is the price action preceding the getting in on the fibs, right? So I need to see very strong movement, and then I would use the blind order on the fibs, right? So I don't just randomly use the blind order on the fibs. It's got to be based on the price action preceding it. But so I would not have, and you can see here, I would not have set up a blind order on this, right? I would have been waiting for, because these are some pretty big bearish candles through here, right? And if I just simply, out of curiosity, let's throw on the fibs on this move here, right? So right here, right? Again, I'm touching on a lot of different parts of my trading strategy and my rules, but when I do get triggered into an order like that, I'm looking for a nice controlled, in this case, if I'm looking to go bullish, I'm looking for a nice controlled pullback, meaning smaller candles, very controlled. I'm not looking for big momentum candles. I'm looking for smaller candles, right? And you can see there's several momentum candles in this pullback here. There's one here, there's one here, there's one here, right? Especially this one, right? If I had set up the fibs, this is the candle that would have triggered me in on the 5-minute chart, right? And that's just way too strong of a momentum candle right there. I wouldn't, even if I had the order open, I would have canceled it at that point. I don't want to get triggered in on the lower time frame like that. I don't want to get triggered in on a big momentum candle. So I hope that makes sense. Yeah, Nelson, I'll take a look at that. Let me get through this little section here, and I'll we'll come right back to that. Remind me, okay, if I don't go that immediately after this, throw it in the chat and I'll take a look. Okay. So Tesla 3 minute, 11 o'clock. Yep. Cool. So anyway, so here I would not have used the fibs, right? I would have just been looking at this point. I would have just been following my rules for the price action and volume. And right here, you got it, right? And so again, in all fairness, at this point, the way I'm going to trade this I'm not going to take a breakout, right? As I was saying before, the way, you know, as Lucian was stating, based on this type, and this is when I approach different setups differently. So on this one, I'm not going to take a breakout because most breakouts fail. So what I'm going to do is I'm going to let this candle form. That is the one that catches my eye. I go, great. Let me see the next candle. Do I get a strong close above it? And yeah, absolutely. Right. So at that point, I would have set up a limit buy. I knew that was going to happen. Hang on. I would have set up a limit buy. Let me zoom in a little bit more. My limit buy would have been right here, stop, down here, right? So the reason I chose that level, the bottom of this candle, the top of this candle, basically is what I'm looking at. That would have been my limit buy, stop, and it just ran. So what I would have wanted, what I would have looked for in this case would be after this candle closed. So, again, Lucian, that's how I avoid those traps, right? This is the candle that kind of is my trigger candle, my setup candle. Then I get the confirmation close above it, which is what I'm looking for. And then the next candle, I'm hoping to get wicked in right here. Boom. Very next candle, I'm looking for some type of a wick, trigger me in, and then catch that run. Would not have gotten filled in this trade, but that's okay, right? I would rather play it this way and avoid those traps like what Lucian was talking about than risk getting, caught in a trap. So would not have gotten in this trade, but you see how this setup, and again, maybe I need to go back and do some back trading on this, and maybe I need to adjust my my trading plan and allow myself to take breakouts or breakdowns under certain conditions, right? This being one of them. Because I will say that I've noticed a lot of these sessions that I do recently, the number of times that I've said, in all fairness, I wouldn't have caught this trade. And they're usually at the times like this when it's a double top or double bottom, and I get that either a hammer candle or the shooting star with volume, and it just seems to run. So maybe I need to take a look at that. And that's part of trading, right? Is constantly taking a look and evaluating and recognizing what you're doing well, what you can improve upon. So maybe, I need to take a look at this, but this would have been a great trade, right? Entry here, stop here, boom, right? You would have, you're clearly, if you looked here, right? If I'm getting this trade, my first level that I need to be able to get to and at least have a decent profit would be right here, this pivot here. And that looks to be about, 1.2, 1.4, just based on eyeballing this, right? And you would have hit that, right? So, here maybe I would have taken off a portion of the trade, or it depends. Also, it's early in the if this was early in the month, maybe I'm just trying to stack some initial wins, and maybe I'm just going for 1.2, 1.4, right? As opposed to holding out looking for 2R. All depends, right? Again, it comes down to how you trade. All right, let me take a look at Tesla. Tesla at 11, around 11. Going to 3-minute chart. Central time. All right, so it was 11. That would have been what, noon Eastern? Help me with that math real quick. I think that's right, right? It's noon for me. Yeah. Okay, let's go with that. Thanks, Joe. Okay, so around noon, and I'm looking right here, right? So let's zoom in here. 3-minute chart. Yeah. So here's a really nice. And I think this is probably the area that you're looking at. Do I have that right now? Somewhere around here? That's what, yeah. Okay. Yeah. So here you go. So I see a nice, double bottom. Let me zoom in a little bit here, so we can get a better look on the volume, right? Yeah. So double bottom, right? It's not a textbook hammer, but it's hammer-ish, and that's all I care about, right? Is I'm just look at the size of a couple things. First of all, look at these two candles, right? So even before you look at this candle, let's go back to the first time it came down to this level and bounced, right? You had these two candles, almost exactly the same candles. One's bearish, one's bullish. Body's about the same. The upper and lower wicks are about the same, right? Everyone can see that. So to me, these are kind of neutral candles, right? Because, and again, I don't care whether it's a bearish candle here and a bullish candle. It could have been the reverse. In the end, they're kind of neutral to me because the bodies are the same. The upper and the lower wicks are the same. Like, I don't look at either one of those candles, aside from the fact that one is red and one is green. I don't look at those candles and go, there's a clear winner here, right? Both of them have the same size upper wick and lower wick. So they're both neutral, even though one is red and one's green, right? But then look at the double bottom, and then you look at the volume, right? Come down here and look at the volume, right? Nothing stands out, right? Nothing jumps out at you on the volume. But then you get a double bottom, right? So you get this double bottom, and then look at the hammer. Look at that candle. It's hammer-ish. Again, it's not a textbook hammer, but focus on the sentiment of this candle, right? There's that long lower wick. Now, look at the upper wick. Look at the lower wick. You can clearly see there's a winner here, right? Bears were here. Bulls were here. Clear-cut winner, right? Plus the fact that it is a green candle. But just the wicks alone compared to these two candles tells me the bulls were in control here. And what do you get? You get a volume spike, right? Now, this isn't a crazy volume spike, but still the key is look left. Off this volume, is this greater volume than the volume immediately preceding it? And the answer is yes. So yeah, so Nelson, that's a great looking setup there, right? So that's exactly what I'm looking for, right? Now, would this have been a home run, trade? No, but again, neither was my Amazon trade today, right? But you could have, let's just zoom in here, how you could have played this, right? If I got into this, again, this is another one of those cases where I go, all right, how would I have played this? Just based on my reluctance to take breakouts and breakdowns, I would have missed this because what I would, after this candle, this is the candle that gave me the confirmation, right? So once that candle closed, I would have set up my limit buy somewhere down here, and I would not have gotten filled. So clearly I do need to go back and look at this and maybe just adjust my rules for the double tops and double bottoms. Because the more I look at this, the more I see it, the more I realize that, maybe there is a time to take breakouts and breakdowns. So I'm going to do some back trading on that. But if you had just taken, let's say after this candle closed, if you had just taken a breakout of it, you would have, entry here, stop down here, and you probably would have got the 1R, right? And even if you didn't, that's okay, right? You take the trade, right? You move your stop up, and let's just jump up to here real quick, right? So if I was using that 2-bar trailing stop after this candle closed, right? 1, 2, my stop would have been down here, right? After this 1, 2, I would have gotten, let's see, all three here. I would not been able to move my stop, couldn't move my stop, could not move my stop. So would have gotten out somewhere, here, right? Is it a winning trade? Yeah. I mean, would have made some money, right? It wasn't a home run trade, but just by, using that trailing stop method, you would have, this easily, if you did not move your stop through here, this would have come back, and let's just see how this eventually turned out. right? Well, it just kind of went all sideways today, right? Just this would have been just painful to sit through for this long, right? And at some point, you know, I'm guessing through this move here, your stop would have been, you probably would have got taken out here or here, right? So there's a great example where you would have allowed a winning trade, right? This would have been profitable up here to turn into a losing trade, because if you didn't get your stop above, at or above break even anywhere through this period, you would have lost here or you would have lost here, depending on how, you know, how you moved your stop. All right, 359. It's a good time to end. I got let's see, let's take a quick look. UNG in the next 43 seconds that we have. And there's the bell. UNG. Now, okay. Who's coming on? Who do I got coming on here?
Yeah, I'm after you, but yeah, you could.
Oh, okay. All right. Let me just who we got? We got Dan coming on, right? Okay.
Yep.
Okay. Ape Gator, by the way. Do love that name. Let me just, since you threw this out here, okay, let me just immediately give you just something to think about. Okay. I can tell you right now, pulling up UNG, it just right off the bat, I can tell you I would never have traded this stock to begin with. Me. And I'm not trying to, this is tough love, right? I'm not coming at you hard. I'm going to give you my initial. I can take a look at that daily chart and go, wouldn't even consider taking a trade on this ticker. I want to tell you why, right? I don't want to just say it. I'm going to give you my reasoning, right? First thing, right? ATR. If I'm seeing that correctly, now granted, I'm 57, my eyes are not great, but that looks like 30 cents to me, right? 30-cent average true range. I'm not trading that. I'm not trading anything. 50 cents is my minimum. Ideally, I want to be 80 cents, $1, something like that. So I can tell you right now, ATR, boom, that's off my list. Doesn't meet my criteria. And that, so Ape Gator. So part of, you know, hit me up in Slack. I want to, and I want to share a couple things with you, a couple videos for you. Okay. Hit me up in Slack, send me a message, and I'll, you know, we'll communicate. I'll get you something. But ATR, not my plan, right? Doesn't meet my criteria. Here's the other thing, right? This stock gaps every day, all day. There's no fear and greed built into this chart here, right? Because it's gapping constantly. And so nobody who trades this or holds on to it is getting shaken out by these gaps because they expect it. So that's just, you know, just something to think about. And then the last thing, let me just see. Actually, the volume is decent, right? I'm scanning across here. So the volume's good. It's just that the ATR is terrible and it's a gaps every single day. So there's no fear and greed there, right? Because people expect it. All right. I'm done with that. Sorry to take up your time, Dan. I just wanted to address that real quick for Ape Gator. So Ape Gator, send me a message in Slack. I want to ask you a couple questions on some things and get you some videos.
Beautiful.
Right,
Love it, Stephen King.
Let me stop my share.
Anything that gaps frequently, the shock value of the gap is just
it's lost. Yeah, it's gone.
So it's tougher.
Yeah, nobody's looking at it and going, "Oh crap, gap."
They're waking up expecting a gap.
Exactly, and that's it.
One way or the other.
Yep. Yeah, they expect the gap, so then, you know, nobody's freaking out when it happens.
Yeah,
I don't know. I mean, assume that this must be some type of an ATR. I can't really tell. I'm sorry.
Yeah, it's United Health. I think, I believe.
So, all right. So sorry to take up your time, Dan. Hopefully Tony's dog is doing okay.
Yeah. We'll have to try to get some updates on that one.
Yep. Let me, I'm going to stop the recording. All right. Thanks everyone for being with me. Hope this was helpful.
Oh, UNG. That's what it was. Yep. Appreciate it as always.